Here are the top 15 holdings of the Russell 2000, which is a growth sector in my opinion. And let's look at some of the stocks in that top 15. All right, first up we have AMC on the Russell 2000. You can see it is above this 200-day moving average. Amazing. If it ever drops back down to like 1283, that'd be a solid place to get in. You don't want to chase. Solid company, solid return, great. You don't want to chase at bad prices. Look to hold for the long term if you're going to be in it, et cetera, et cetera. Let's go to plug. Let's go to the next one, PLUG. You can see the same thing. You don't want to chase. Please put in chat, don't chase based on. So the 200 is down here at 525. The yearly open was at 34.64, right? So you don't want to chase. Anybody who got in the 70s are screaming right now. Please put this in chat. It is all about the price in which you are able to enter. Because you could have a great momentum movement based stock like this. But if you waited 6 or 7 months to get into it and then you finally got in at 57, it was not the ideal time to get into that stock. Get in at prices that will put you at a advantage that most people will not. And talk about FOMO. If there's one stock I wish I would have called last year, it would have been Novavax. If you look here in March, it was at $9.01. 200-day was at 93.53. It ran up to 331 and it almost dropped back down to this yearly open at, what is this price? 112.92. It was there for a brief moment. I didn't have my alert set, so that's a great lesson for you. So you don't make the same mistake. Set your alert if there's a price in which you want to get in, and then you can see it went from 112 to 331. It came back down, almost touched it again. It's at 188. So, and this is why when you go back and study history, you can see going back to 1995, Novavax historically has done these kind of big booms and busts, right? So back in 96, it got to 166.62 and then fell apart. In 2000, 248 was a high and it came down to $89.55. But look at these historical moments. In 2000, it got to a high of 311 and then it fell all the way down to $33.37. And then it had a couple small mountaintops here. But the next time this happened was in 2015. I remember this move went to 300. And then before 2016 came in, it fell to $22.43. The homework that I want you to do on Novavax is once it falls 80% or 70%, how long does it take to go back up? So we had a big boom in 2000. We then had another one in 2015 and then again in 2021. Please take advantage. And then for those of you that love support and resistance, you can kind of see the areas. 171.59 is a secondary resistance area. So in 2002, 2005, 2009, it hit those levels over and over again and then fell apart, followed by the big mountain moves up to 300. And you can see here, if we look at this level here at 282.96, it normally does not sustain that price. Once it gets in that area or that zone, it starts to fall apart. Next week, I'm going to do a full breakdown on what I call buy and sell boxes. But this is an example. So I will go across this entire screen and I will mark off this area, double click it. I would change this color to red. And then I would know as soon as I look at the chart what that looks like. Pink. Let me make it red. Okay, great. Make it red. And I know as soon as it goes up to these levels, it does not sustain these wicks or these thin lines right here. That is an indication that the price went there, but because it's thin, the prices were not able to be sustained long term. So you can see anytime we got into this red zone, they were not able to hold their price. Does that make sense? Yes or no? And then also there are buy areas or buy zones that you should mark off, but I'll go over that full. Speeding through the Russell, this is the notorious GME. We've talked about this one enough. Let's go to RH. Great. We've seen this one break up to the upside tremendously. Once again, yearly open, 448. And yes, the price is high, but you want to pay for quality. 448.44 was a great entry for it. The low of that was 412 and it went to 713. If you're not using the yearly open, you please, I'm begging you to put it on your chart. Let's look at PEN, something Troy's talked about. In addition to DraftKings, we can look at that. You can see that they had a nice movement up. They are then starting to break down. If it gets down to this 200-day moving average at 2501, could be a great place to enter. Secondary entry could be at the 85.26 area for those of you that are not using the 72 or the 100. Rounding out this list is NTLA, Intella Therapeutics. Had a hell of a push up. Let's look at Sunrun. And then you also want to go back since inception to see if the stock is good. So let's look at CLF, and this is the reason why you want to go back since inception. So the 5-year chart looks pretty smooth, right? The previous top of it was what, 2017, $12.22, went down to 263. Great, it's at 23 bucks now. But when you go back and zoom since the very beginning, this is what you'll see. In your opinion, does this look like a good stock? Previous high was 121.95, fell all the way down about a year and a half later to $11.81. Everyone said that they can live through a drawdown like this, but most can't. Great. All my technicians, you can kind of see it broke down again, came down to 31, 32 bucks, and it's just barely crossing above the 200-day moving average. Now, it is to the upside, but when a stock historically falls like this, the probability of it going from here, say 1489, to getting back to this mountaintop of 102 is very low. This is why you need to go look at since inception to see if the stock is truly remarkable. DAR, on the other hand, tells another story. Top and fell down and that's why I say building the base is good. And it hit this 200, fell apart, and it's been on a tremendous run since 2020. You can see here at around 14 bucks would have been a great entry, and now it is currently at $67.54. When you look at this long-term chart and fully zoom out to see the macro picture, it does a tremendous service to you to be able to know what it's doing. Same thing with Decker's Outdoor. Great momentum, but they've been able to sustain it. They are going up to the upside. Let's look at LAD. Some of you asked about this in comparison to Tesla. I don't like it better than Tesla, of course, but LAD, Lithium Motors, is moving pretty damn strong. And this one is APPN. Once you get further down the list, I don't like them as much. The top 5 or 6 are usually the best in an index, and this is true here. APPN is solid. Most people don't even know what the company actually does, but there are some better examples. Like if we go back to the deck chart, we can see I like this chart a hell of a lot more than APPN. Can you agree? Yes or no? So you want to invest in companies that, of course, their stock is rising, revenue is great, profit margins are great, and then you want to choose safety.